Hello and welcome to today's NinjaTrader ecosystem event, How to Trade with Data, Not Your Emotions. My name is Chris and I'm a platform representative at NinjaTrader. Before we start the webinar, I have a few housekeeping notes. Secondly, this webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to NinjaTrader Brokerage using the phone number or email on screen. Lastly, if you are new to NinjaTrader, please make sure you sign up for a free NinjaTrader account, which includes access to 14 days of complimentary real-time market data. Our platform is always free for advanced charting, strategy, backtesting, and trade simulation. You can create your free account by following the link on the screen and then clicking Get Started under the Welcome section. And before I turn the mic over to Andre, it is important to understand that futures, foreign currency, and options trading contain substantial risk and is not suitable for every investor. It is possible to lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. For more information or a copy of the full CFTC risk disclosure, please visit this link. Also, please remember that these training sessions are not a solicitation or recommendation, but simply educational in nature. Thanks again for joining us today. Without further ado, it's my pleasure to welcome to the NinjaTrader room, Andre.
Hey guys, how are you? Thanks everyone for being here. Thank you for having me as well. So I hope everyone's having a great day. It's been a wild market recently. I'm hoping that everyone's trading has been going well, adapting to markets correctly. I'd love to give a little bit of background about myself, kind of the founding story of Edgeful. It'll be pretty quick. So my background is in finance and accounting. I was an analyst at a hedge fund in Boston called Weiss Asset Management. I was also an analyst at Goldman Sachs. And when I decided to leave Goldman Sachs so I can trade my own capital. And when I did that, one of the struggles that I had as a trader was, what should my bias be in the morning? Should I be bullish? Should I be bearish? I was trading options at the time. This was in a very long time ago. And I was trading options at the time, and I never really knew what direction should I be bullish or bearish. So one of the concepts that I came across was the gap fill. So all it is, it's very simple. It's when price today touches the previous session's close. And something that kind of resonated with me, because every day you get a bias and a target. So pretty much if price opens above the previous close, you can be short bias targeting the previous close. If it opens below, you can be long bias. So it's very simple in terms of a structure. And as I did more research on that, what I found was that everyone online kind of just says, oh yeah, all the gaps fill. The gaps always fill, which is obviously not helpful to anyone, especially as a trader. It's not what you want to hear. So I actually went and bought a bunch of price data. I went into Excel, threw it into Excel, and I started to work a bunch of spreadsheets, trying to figure out how often do gaps fill? Are there certain weekdays that behave differently? Do gap sizes behave differently? What's the actual probability? Like, how often do these things actually happen? And what I found was that I was starting to use this information in my actual trading, where I can see how often a gap up fills or a gap down fills. Then I started to add more and more reports to my worksheet, to my spreadsheets. And I'm sure a lot of you here watching have used Excel before. It's not really suited for this type of analysis. So I go online, I'm looking for something like this that can tell me just the historical data, just historical reports on the opening range breakout, the initial balance breakout, the gap fill, what weekdays make the highs and lows of the week most often. And I couldn't find anything. And that is the reason why I built Edgeful. I wanted to give people, and myself included, to be honest, a platform that I can use to see how often certain things happen, certain strategies, certain reports, certain trading concepts, how often these things happen in a historical context, something that updates every day that allows me to see how different markets are actually behaving. So built by a trader, for a trader, and now for a lot of traders. So I'm going to share my screen here. And if you guys can please just let me know if you can see this okay, that would be fantastic. And I'll try to open the chat here as well. So I just have this up. Perfect. All right. So just in terms of a kind of a run through, Edgeful is a data analysis platform built for traders that tell you how often does a gap fill, how often does price break out of an initial bounce, how often does price break the opening range. And it's more so historical probabilities in a way that eliminates the requirement for you to have any analysis experience. So we want to make sure that this is accessible to anyone, regardless if you're a numbers person or not. So just to dive into the actual app itself, there's really a few main pieces that I want to show you. And that's going to be 4 different structural features. One of them is the Discover page, then the Report page, the What's in Play, and the Screener. So these are the 4 main integral parts of Edgeful that every trader can use and should use every day. And I want to start with the Discover page. So the purpose of this page is to allow our users to explore our reports in a way that's kind of like e-commerce like. So if you're on Amazon, for example, I'm sure everyone has shopped on Amazon. You're looking for a black water bottle. On the left side, if you type in black water bottle, and on the left side, you're going to have all your filters. So you want to filter for prime only, you want to filter for 5 stars, and you want to filter for black, right? And then once you do that, you know that all of the little cards, all the little tiles that appear are based on what you filtered for. So it's a very narrow view on what you actually want to look at. We have designed this page to reflect that same experience, that same user experience that everyone is very familiar with. So starting with the top here, and for most of you that are watching this, you're going to be in the futures section. It is defaulted to futures, so you're all set there. And then this is where the report filters come in. This is where you start to kind of narrow down what you want to look at. So right here, we start with the report types. We have reports around price action, volume, and indicators. So if you, let's just say you want to look at price action reports, these are the most popular, by the way. We definitely have the most of these. We have 100 reports total, probably a little bit more now, but it will automatically select all of the price action report types for you. So let's say you want to remove chart patterns, you want to remove performance tracking and range and trend analysis. Now you'll have all of the reports for market open and close strategies and session analysis. So here you can see the actual title of the section you're looking at. So you can see these are all of the market open and close strategies. And then this is where the session analysis will start. So from this page, you can look at the report types, the report categories, and then you can also go by trading style. So if you know you're a swing trader, you can click on swing trader. If you know you're a scalper or day trader, you can just filter right here. Now, let's say you've filtered and you've kind of explored what you want to do. There's only really 3 things that you can do from here. And that's within this area right over here. There's really 3 buttons. One of them is this bookmark button. So when it's blue, this means that you've bookmarked your report. So I'll actually make this a little bit bigger, and I'm just going to zoom out for a second. When you bookmark this, it'll be blue. And when something is not bookmarked, it's going to be gray like this. Now, if you bookmark, which I highly recommend for your experience, you're going to see off to the right, your bookmark bar is going to, like the reports are going to populate in here. If you guys want to go and screenshot this, these are my favorites. These are pretty much like the most popular among our traders. But just in terms of starting out where to start, this is a pretty good sample size. And this is definitely more than enough from what you'll need. But just so you know, when you bookmark something, it's going to appear over here off to the right. Then let me zoom back in. Then there's really 2 other buttons. There's the explainer, and then there's go to report. Go to report's pretty simple. Obviously, you're going to go to the actual report page where you can start to dive into the data. But then the explainer section is going to bring you a pop-up. So it's going to make that explainer image bigger, obviously, as you can see. It's going to show you the details of what you need to know relating to this report. Let's say you don't know what a gap fill is. You've never heard of a gap fill. This image is going to give you a brief view of what you'd want to see. So, and also very importantly, every single one of these cards has a 1-sentence explainer telling you exactly what the report does. So you can decide from this page whether you want to go and dive into this report or not. So from here, what does this report measure? This is the gap fill report. This report measures how often price today touches the previous session's closing price. So from here, we give you the opportunity to bookmark it again. As you can see, it's very important to us that you do bookmark, but now we can go to the report from here, or you can click out. So if there's no questions on that, I'm going to continue. And by the way, guys, don't wait until the end to ask any questions. You can just ask them right here. I'll try to answer them as we go, so we don't have to forget or go back or whatever. If you don't want to, if you have any questions, please don't be shy. So let's actually go to the report. Let's go to the initial balance report here. And so this is the report page. So what I'm going to do here is I'm going to open my sidebar so you can see kind of like everything going on. I'm going to walk you guys through how everything is laid out first. It'll be quick. And then we'll go into the actual reports here. So starting with this sidebar, this is where you can choose your asset. So again, most of you are going to be in the futures asset. You can do stocks, Forex, and crypto, but for this sake, we're going to stick to futures. This is where you can select your ticker. So we have any futures contract that you can think of. If we don't have one in here that you want us to look at, just message here on the bottom right, send us a message and ask us to include it. Then these are the report types. So you can actually filter for the reports here, but we have it defaulted to all. So then when you open this number 4, you have all of the reports right over here and you can type and search for whatever you want. In case you discover something that's not on your bookmarks, you can just quickly switch back and forth from there. So the last, or few of the last pieces here are the date range. This is how far back you want the analysis to go. So in this case, the date range, we have it default to 6 months. Really good representation of the current market environment while giving you a decent sample size. You can go back up to 5 years. So these are just shortcuts right up here. And then you can also select actual custom start and end dates if you want. Then the session, this is actually extremely important. So I highly recommend actually paying attention to what session you have selected here, because this will filter the data out for the price action within these start and end times. So you can see here, the New York session is default. You can see that 9:30 to 4 p.m. is that session. If you want to look at all of the data, you can look at the daily session. You can also create a custom session. I know some people like to use the 4:15 regular trading hours close for futures. Some people like to start at 8:30. It doesn't matter. You can create a custom session right over here. You can add as many as you want. Then number 7, this is actually a really interesting one. These are sub-reports or filters on the report itself. So you can see here, this is the initial balance breakout report. And then we have it by weekday, we have it by size, by performance, et cetera, et cetera. So if you want to look at any filters or any variations of this report, it's going to be here, number 7. And then finally, the customizations. Almost every report that we have has a customization. So when you click on this here, you're going to have the ability to change your, sorry about that. You're going to have the ability to change your IB timeframe, your initial balance timeframe from 1 hour to literally whatever you want. The 1 hour is the standard. That's what we have as the default. It doesn't matter to us what you make it. It's totally up to you. You have the breakout criteria. So if you like to look at things by candle wick versus candle close, you can change that. One thing to keep in mind here is that if you do select by wick, this candle time frame is not going to matter. If you select by close, that's where this will come into play. But the important piece is that you should always explore the customizations, because you can kind of fine tune these reports based on your trading style. Then we have up top the what's in play section. This actually uses live data to tell you what's going on with this report right now. So obviously it's post-market, so there's nothing really going on. This is just a summary of what happened today. Going down, we always have a visual representation of the results. And then this is our table representation. These are the streaks. So this is the last 5 days of the initial balance. This table down here breaks down every single day of the results in the last 6 months. So you can actually go through, you can sort and filter this table. And then this is the education section. This is super, super important. I cannot stress this enough. Anytime you come across a new report that you want to look at, go straight to the video, watch the video. They tell you exactly what the report is measuring, how you can use it with chart examples. They're at most 5 minutes. It's a must for you guys to watch these videos when you're looking at a new report. I'm actually redoing every single one of them right now because we just released a massive update to our interface. So if you do see an older interface, that's totally fine. We're going to have all new videos out very soon. Then for futures traders, it is very important that you understand how the sessions work. And if you ever forget, I highly, highly recommend at least watching this video once, because it will tell you exactly how the sessions work and how changing the sessions will impact the reports. This is definitely crucial for you to understand if you are going to use any custom sessions. Then we just have a simple explainer graphic. This is the one you saw from the Discover page. And then over here off to the right, we have the text explainer. So if you're more of a reader rather than like a video person, you can you can read the explainers right over here off to the right. And that's it. We just got a disclaimer down here. Make sure you read that. And if there are no questions, I'm going to continue. Oh, I did see a question actually. What date range do you recommend? So we have 6 months defaulted, and what I personally, and this is my personal opinion, I'm not saying you guys have to do this. You guys don't have to listen to me. You can obviously decide for yourselves. What I like to do is look at the 6 month, compare that to the 1 year, and then compare that to the 3 month. And the reason that I like to do that, and the reason I personally don't go over 1 year, is because the markets change very quickly. And the data reflects that. That is not my opinion. That is reflected by the data. But what you'll notice is, or let's just say, I get this comment all the time. What about data going back 10 years? What about data going back 20 years? And my response to that is, the markets don't move now the way they did in 2015 or in 2005. So looking at data from back then is only going to skew what you're looking at. Even if you go back 5 years, which we do have the option to go back 5 years, it's not that the data is irrelevant. It's that the market environments have been shifting. So if you go back 5 years, you're now going before COVID, before the 2020 election, before the bull markets of the 2021 into 2022, before the bear market of 23, and then the bull market of 24, and then the election of 2024. So there's a lot of different things that are going on throughout that 5-year period. And the markets now are different from when they were back then. And that's not my opinion. That is reflected by the data. And you can, whenever you guys go into this, you can actually compare using custom dates. But I recommend the 1 year, compare that to the 6 month, and compare it to the 3 month, because you'll be able to see if a report is increasing, if the probability, if the historical results here are increasing. So let's just say this is going from the 1 year is 60, the 6 month is 75, and then the 3 month is, let's just say 85. I'm making it up, obviously. You can see how this is something that's coming more and more in favor. And that's where you can say, this is something that I want to hammer on. Whereas if the inverse is true, you can say, actually, it used to be a lot higher and it's slowly coming down. Maybe this is something I want to take a step back from. So in terms of the date ranges, that's what I like to do for myself. Obviously, you guys can do whatever you want. Just keep in mind, obviously, that the 3 month is a much smaller, more relevant in terms of more potent data set. Yeah, of course. So I'm definitely going to go through this, a couple of reports here, and I'm actually going to show an example of a price chart. So don't worry about that. And let's get into the initial balance report for a second. So we're looking at ES here. You can see always the ticker you're looking at here. And just so you guys know, the initial balance is the high and the low of the first hour of the session. So you can see if I scroll down, this would be the high and the low of the first hour. I'm going to show you guys a chart example in about a minute. But now we're looking from 9:30. We're starting our session at 9:30. So the initial balance is from 9:30 to 10:30. And what you can see in the last 6 months in the New York session, 75% of the time, price has only broken out to one side of the initial balance. So it's only broken out to one single side, which means that in the last 6 months, 75% of all days have broken out to one side and then not the opposite side. 23% of the time, it has broken both sides of the initial balance. And then only 1.5% of the time, I think one of them was the other day. Only 1.5% of the time in the last 6 months, price has not broken out of that IB. So it's really important to note that in the last 6 months, you'd want to be targeting one side to break and then not the other side. So in terms of even thinking about some sort of intraday scalping, something along those lines, a great target would be one of the initial balance high or low. So that's one thing to consider, because the single break is definitely happens a lot more often. Does anyone have any questions on that quickly? If not, no worries. Ask away as I go through this. So we don't have anything market profile related as of right now. We do have some things which I can just tell you to look at on your own time that relating to more range bound days. And that would be the ATR and ADR reports. Those are really great. And I can cover one more, which is the volume and range by weekday, but I want to make sure that I show you guys some of these more popular high-level reports. So now let's go to the opening candle continuation report. So for this one, is there a way to compare multiple timeframes, compare performance over? So as of right now, the way to compare would just have to be to click from the 6 month to the 3 month, and then so now we're on the 3 month. Now you go to the 1 year. Now you can see how it's changing. I mean, in this case, it's pretty static. Some of the reports have a much bigger difference. So let's go to the opening candle continuation. Now, this report and the concept around this report is for every time the first hour of the session is green, meaning the open to the close of the first hour from 9:30 to 10:30, if that is green, so meaning that the close is higher than the open, obviously, how often has the day closed green? And in the last 6 months, 73%, almost 74% of the time on ES, the day has closed green. Now, what I want to do is I want to show you guys NQ. Now, keep in mind that right over here, you can see if that opening session is red, like you can see up here, that what's in play will actually tell you what the opening candle color is and how the day, well, in this case, it'll tell you this is the market closed, obviously now, but it'll tell you the day closed red. Now, in this case, you can see 60% of days have been red when the opening candle is red. If I switch to NQ now, you're going to see that the correlation is a lot higher. So if that first hour on NQ is green, in the last 6 months, 82% of the time, the day has closed green. If that first hour is red, almost 77% of the time, the day has closed red. So in terms of understanding or kind of like building a bias or using different things to build a bias, this is a really great tool to use in terms of building a bias. Is the opening candle green? Is the opening candle red? Meaning that first hour. And you can customize this to be any period throughout the day up to 3 hours from the open. It's always from the open. So this is something else that you can use. And what's nice about this opening candle continuation and the initial balance report is that they form at the same time. So the initial balance forms at 10:30. So does the opening candle continuation. So let's say that the opening candle is green and then price breaks out of the top side of the initial balance. Those are two bullish biases that you can use because price will only break out typically of one side. And this is on NQ now. This is 82% of the time. Jack, I will answer your question in 1 second. So this is a great way that you can have a bias in this case, obviously a bullish bias. Now, this doesn't mean obviously that price is just going to rocket upwards. Obviously, yes, you have two very strong reports that have a bullish bias, but this doesn't mean that it's going to rocket upwards. So you need to be mindful about what your entries are and everything else, but your bias overall is bullish. Now, we do have this what's in place section, and I'm going to close this quickly. And right now we're looking at NQ, and this updates live throughout the day. And we have each of the reports right over here that you can actually have up, which I recommend having this up at all times throughout your day. So you can see how these different reports are setting up. So you can see opening candle continuation, you can see your initial balance, you can see your orb, gap fill, whatever else. There's a ton of reports that we're going to add in here. Another piece is your screener. This is your what's in play screener. This is a huge, huge plus that we just released. Our users have been really loving this. And what this allows you to do is look at multiple tickers considering the what's in play. So let's look at this for a second. Here I have all tickers, meaning stocks and futures. This is what we have for the live piece. And then you can go here and you can select all of the tickers. So it starts with the equities on top. We don't have all the equities in the live data, but we have all like the big names that kind of move the markets. And then we have the futures towards the bottom. So you can see here, I pretty much have the MAG7, QQQ, SPY, and then ES and NQ. What I like to do is I like to look at the gap fill. Now, this is going to look different when we're at the like when the market is open, because obviously this would be changing live. But you can see that all or practically all of these names, all these tickers have had a gap up today, and every single one of them have filled, except Apple had a gap down. You can see the time that they had filled, you can see the gap size, everything else, and then opening candle continuation. Now this, in this case, it also gives you one of the columns here during the market hours is a bias. So from here, you can see Apple, Amazon, Meta. In this case, obviously you can see red, red, red opening candle, red opening candle, red, red, red. Only Tesla and Apple had a green opening candle. So overall, and including ES and NQ had red opening candles. So overall, if you're looking at this as a trader, you can decide to say, I either want to fight the trend, fight like the overall opening candles, or I can go with them. That's totally up to you. But this is something that will give you a view to say, what is the Mag 7 doing? What are the big indices doing? And you can add whatever you want. You can add RTY, you can add YM, and this will all update live, obviously. And then same thing here, you can pick the initial balance and you can pick whatever reports you want here. And then going down a little bit more, initial balance, you can see the majority, only one, Tesla, didn't break the IB low. So every single one of these here broke the IB low in this case, which is, if you're considering a single break stat, which I'm not saying that all of these have a strong single break stat, but if they did, this would be pretty bearish. And then previous day's range. This report looks at if price today breaks previous day's high, how often has price closed green versus red? If price breaks previous day's low, how often has price closed green versus red after breaking that low? So this is the screener. Personally, I love having this up on my charts or next to my charts at all times, just so I can kind of see what's going on, because I like to trade the SPY, the QQQ in terms of options, and then I like to trade ES and NQ in terms of the futures. So this is a piece where a lot of our traders have it's been giving them an overall market view where they can make their own decisions on, hey, I should be bullish or I should be bearish, or actually it's kind of split 50-50 where some of them are bullish, some of them are bearish. And maybe that means I want to take a step back and not take a trade where it's kind of more of a coin toss. So this is the place where you can go and see that. And I'm going to stick to futures because we are on NinjaTrader right now, futures based. But I can show you some other examples for the NQ. Now, what I'm going to do, and just so you guys know, you can click right over here and you can see, you can go straight to the report and with the ticker already filtered for you. Now, the one thing that I want to show you guys is a few of these. Yeah, perfect. So a few of these reports are just one more report here, which is the by levels variant. So what this report looks at is, so what this report looks at here, and this is I'm on NinjaTrader right now. I'm on a demo account, just so I can have this up for you guys. What this report looks at is if the initial balance range is 10 points, let's say, how often does price continue 10 points to the top side? So you can see right here, this was a few weeks ago. You can see this is my initial balance high right over here. This is my initial balance low right over here. The two blue ones are the initial balance high and low. Now the New York session starts at this first gold line, and let me know if you guys want me to make this bigger too. Just if you want me to, just let me know. But this is the open of the session at 9:30. This is the close of the initial balance. So you can see right here is my initial balance range right over here. From here, because the high was here, the low is here. That's my initial balance range. This is the close of the session. What this report measures is how often does price continue, and I'm actually going to go to ES here. How often does price continue in multiples of that range? So in the last 6 months, what I want to do here is start to pair some of these reports together. So what I just showed you before was that the single break stat is very strong. So in the last 6 months, price has only broken out of one side of the IB. So if I go to my customization here and I filter for the day type to be breakout, which is when price breaks only to the top side, and we also have breakdown, just depends on what's going on today. You can see how often price has reached each of the multiples of the IB range. So you can see here, this is the IB. It's from 6102 to 60, 70. That's the IB range. Now this purple line, this first purple line right over here is half of the IB range to the top side. So from the IB high, let's just say this is 10 points for easy or 100 points for easy numbers. If this IB range is 100 points, from IB high to the 0.5 is 50 points. It's just half of the range. And up here, this is another 100 points to the top side. And then each one of these, the 1.5 is 150, the 2 is 200, the 2.5 is 250. You're just taking the IB range and you're continuing upwards and downwards. It doesn't really matter. But we filtered for breakout days. So in this case, we're looking for the move upwards. Now, what you can see here is that 67% of the time, roughly 67% of the time in the last 6 months, on breakout days, price has touched this 0.5 level, which means right over here. So let's say you want to look for a data-backed target. You don't want to go based on your gut. You don't want to go based on what people think. You want to go based on a data-backed target. You can go and target or take some profits at this point. This is obviously, you need to consider the conditions of the market that's going on that day, but this is a high probability or a high, in the last 6 months, price has reached this point 67% of the time. Now, there is a pretty significant drop off from the 0.5 to the 1. So it's not very high conviction to hold your entire position all the way up here. And I mean, obviously this is completely dependent on what you guys like to do and the market environment that you're trading in at the moment. But the probabilities in the last 6 months have dropped off in terms of the 0.5 to the 1. So a decent profit target, or at least to take some of your position off, would be right over here. Now, in terms of the last report that I want to show you guys, or one of the last reports that I want to show you guys, is the buy retracement. And what this is actually one of my favorite reports. And what this measures here, and let me just go to my customization to make sure everything is good. What this report looks at is, now you can see here, I'm going to talk about this one first. This is only on single break days. So we're filtering only for the days where price continues in one direction, or at least breaks one side of the IB. And you can see here, these are the breakout days right over here. And then this is the breakdown days. So all of these days here are only for when price broke to the top side of the IB. And then these days over here are when only price breaks to the downside of the IB. This is the one that I'm going to focus on for this example right over here. Obviously, you can see that price broke to the top side. What this report looks at is after the first break. So this is right over here, this candle right over here. It might be a little bit small for you guys, but right over here is when price initially broke out of the IB. And now from here, this is where the single break stat comes in, which in the last 6 months, roughly 75% of the time, price has not historically come down to this point, which obviously in terms of a bias, this is a bullish bias. Now, of all those days, after the first break, which is this candle right here, what this report looks at is how far back into the IB has price gone. So each of these levels here, the blue, the black, and the gray, are a different percentage of the IB. So this is 25% downwards from the IB high. This is 50% downwards from the IB high and 75% downwards from the IB high. So in the last 6 months on ES, after the first candle break, 61% of the time, price has come back down to touch this green line. So for me, the way that I personally would interpret this is, and obviously you guys need to do your own trade analysis, but this is a great entry for me personally. I think that this is a very solid place to enter, because you know that if you were to enter at the breakout, 61% of the time, historically, you're going to be in some sort of drawdown because price will retrace down here. Now, the historical stats on the 25 versus the 50% drop off pretty significantly while still being a single break day. And the way that I interpret this, and these reports, the reason we don't tell you exactly what to do is because everyone has their own interpretation. But one of the ways that I interpret this is So Sammy asked the question, how are these percentages calculated? It sums up to 90%. So the way that this works, and the reason that it doesn't add up to 100% is because not all days will reach each of these. Some days will be a single break day and only come back in a little bit. And I don't have my customizations set. So like, let's just say I had each of them set to like 1%. It's just based on how far back into the range it comes. So like, the reason why it doesn't add up to 100% is because not every day is going to reach each of the levels. So like in this case, price only reached this one here, but the 75% it didn't get to, which would be down here somewhere. The 50% it didn't touch. So that's why it's not adding up to 100%, because it doesn't always even touch the 25%. And it's only looking for the criteria right here. So if I scroll down, you can see the actual retracement levels of each of these days. No worries at all. You can see the retracement levels of each of the days. So not a stupid question. I'm actually really happy that you asked, because I'm sure other people had that question. Typically people actually don't ask these questions, and I'm really, really happy that you did. So no silly questions. And I'm not saying that, like, I'm being completely honest. But the important piece here for this 50% retracement mark, this red line here, is that on a single break day, so that means price breaks to the top side and it can retrace back in here. But for all the times that it's been a single break day, only 22% of the time in the last 6 months has it actually gotten to this point. So my interpretation, my personal opinion on this is obviously, again, you guys have to do your own analysis, but when it touches this, I am not too confident that it's not going to become a double break day. So I don't want to wait all the way up here to start to get to enter, because there at that point, it's more likely to be a double break day, which, I mean, this is just something that's my interpretation. So my bullish trade idea starts to become a little bit invalidated after price breaks this point. So in terms of having a long bias, yeah, thank you. I'm happy that you guys are liking this. So after you guys, this long bias, in terms of my personal entry, at least the range that I start to look to get long is right in this area here around the 25%. It could be more, it could be less. Obviously, it doesn't have to be exact, but it could, for me personally, it could be right here. And then where I start to think, is my bullish trade idea invalidated, is really below this red line. And then again, like we mentioned before, in terms of having this bullish bias for price to continue higher, with the opening candle continuation being bullish, with the single break day breaking to the top side being bullish, and then the two IB levels, which I showed you right over here. These are great places to take some risk off the table, to take something off the table. Now, and I'll switch back here. This is the 0.5. This is the one. This is the one. Yes, there is a recording of this, luckily. I'm happy that you're sneaking. I mean, I don't have any comment on whether I'm happy or not that you're watching this, but I love your dedication. So what's nice about this, and the way that I like to interpret it, is my trade idea is invalidated pretty quickly. So for me, once it gets really below this red line, my trade idea gets invalidated. But then the continuation piece here is a lot. Yeah, I'm happy you're here too. So the continuation piece typically is going to be a lot, in terms of like relative size to the initial balance, is going to be bigger. And that's why I like these reports. Now, obviously this is for ES. The data can change for NQ, for YM, and the data can also change in the next 3 months or 6 months. So one thing that I really want to show you guys now is that how much the data can change, and why it's important to be looking at data and not your gut feeling when you're trading. Now, I find it very, very hard to believe that people can, with their gut, adapt to changing markets. I find it extremely hard to believe, to be honest. Yeah, I find it really hard to believe. Now, if you go to the first quarter oh, sorry. If you go to the first quarter of 2024, so from January to March 31st, the opening range breakout stats on ES. So in that time period, 80% of the 15-minute opening range breakout was a double break. So price would break out to one side and break the other. Whether it's the downside or the upside, it doesn't matter. 80.95% of the time in Q1 of 2024, the double break was the way to attack this report. Now, if I go to Q4 of the same year, if I go to Q4 of the same year, oh, I didn't do my start date properly. Sorry about that, guys. Just give me 1 second. So, okay, October. There it is. Okay. Now, what you'll notice here is in the same year, from Q1 to Q4, the double break was cut almost in half, from 80 to 50% of the time in Q4, which means in this case that there was more continuation, or price just didn't pull back as hard after breaking out to the top side or to the bottom side, which means that this data can change very drastically. And the name of this event is Trade with Data, Not Your Emotions. Because if you're trading with your emotions, you're having so much success in January, February, and March with the orb double break. And then the year progresses and it progresses, and you see my orb double break, my baby, my strategy is not working anymore. But you're stubborn and you keep trying to hammer it. This is where the data can tell you objectively, like nothing in here is my opinion. This is all historical. Hey, this is not working in this market environment. And that's where you can say, you know what, I'm going to take a step back from this strategy. I need to look for something else. I need to look for something that's working now, because personally, this 50% is not something I'm interested in. It's not something I'm interested in. And it's up to you guys. I mean, obviously it's completely up to you guys. We don't have anything in here that's going to give you a signal or anything else. It is completely up to you guys. But I am personally not interested in this 50%. I want something that's 65, 80, or sorry, 68, 70, something. Obviously, anything north of 80 is fantastic. But this is where you can start to use this data in your trading to say, I actually have historical data objectively on what tends to happen around this concept. So what I recommend is that when you go into a trade, you have something to justify the reason that you enter, that you stop, where your stop is, where your target is, where your bias is. If you can't explain the logic around a certain trade to someone, to another trader friend of yours or a mentor or a coach, you probably don't want to be taking that trade. And if something has a historical 20% probability percentage in Edgeful, I mean, it's up to you guys, obviously, like anything is possible, but you just want to have the data on your side. So that's my recommendation in terms of like how to read these reports and how to navigate it and how to adapt to the changing markets with data and not your emotions. Edgeful will update every single day, so you guys will always have the most recent market environments in here for you on any ticker in any time frame across all the reports. And we have live customer support here. You can always send us a message, and you can request a custom report if we don't have something that you want. So that's all for me. If you guys, again, if you want to screenshot my bookmarks here, and again, this is going to be recorded, but if you want to screenshot my bookmarks, this is more than enough from what you'll need to get started and this is all tailored towards scalping and day trading. We're actually building the indicators for NinjaTrader 8. We're actually working on that right now, which I'm super excited for. We've gotten so many questions about it. We are building them out, so they're coming soon. And we don't have any VWAP reports. And now one thing that I'm going to say is that the custom requests, so we can build a custom report request. However, they have to be objective. They have to be very black and white. So in this case, for the IB, we have did price break out of one side, both sides, or neither side of the IB? It's a yes or it's pretty much like a yes or no. Did it happen or did it not? And it's very hard for us to build a report around VWAP. Now, if you have an objective measure that you want to look at, that's totally fine. You can make a request. It's part of your plan, by the way. All of these features, we have one plan. It's part of everything. It's $49 a month. The only discount that we're ever going to do is the annual version of that plan, which is $39 a month, but billed annually. So that's something to keep in mind, that we will never do a discount, not Black Friday, not New Year's, none of that. The only discount we have is 20% off for the annual plan. Yeah. So it's all part of everything that I've showed you is part of the single plan. Yeah. So I hope that answers your question, guys. I appreciate you. I love all the questions. It was awesome to get these questions. It's super exciting when I get to answer questions while I go through this and kind of jump around. But as of anything that I want to show you guys, one thing that, again, just to hammer it home, highly, highly, highly recommend watching these videos at the bottom of the reports, and every page at the top right has a how-to for that page. So this is the how to use reports. You can go to the what's in play, how to use what's in play. You can go to the discover, how to use discover. So you have it all for you guys. So, sorry, I'm a little bit confused on the choose report. So in terms of the choose report, this is just another, it's like a supplement for the discover page. This is where it has all the reports in here. So if you want to quickly like search, let's just say ATR, you can just search for the ATR report. It's a more condensed version of the discover page. Yeah, so we also have, just Jan, I'm answering your question now. We have a Discord that has trading in there. We have a bunch of videos. So these videos will explain exactly what the report is doing, but we don't want to tell you, really, to be honest, like we don't give you any signals. Like we're not going to tell you like, this is where you buy, this is where you sell, this is your stop loss. Like we'll never do that. That's not what we do. We want to give you the information so we want to teach you how to fish, not to give you the fish, right? We want to help you develop the skill to trade, and we want you to have the data on your side. And are you creating Trader Keith? I mean, you can reach out to our support down here and you can send us a request. We are open to anything. I'm looking forward to the NinjaTrader version. Yes, Gene, so am I. So just so you know, the Forex section is in here. You can look at any pair, the same thing for stocks. You can look at any equity. I mean, the majority of them. We have over 3,000. We have almost every Forex pair. We have crypto and we have futures as well. Then I'm actually not familiar with TSX. You want to tell me what that is, Mark? That would be great. So we are coming up on time right now. I hope, Top Step. Yeah, we don't have a Top Step integration at the moment, but we can, I mean, if you guys want to reach out, just let me know. And then in terms of the volatility reports, the one that I actually would recommend you guys check, I'm not sure how much time we have, to be honest, but volume and range by weekday here is the one that I would recommend that you guys look at for volatility. So for volume and range, this is the one where I would say, keep in mind the environment that you're in. So sorry, just one second. Keep in mind the environment that you're in here. So if you see that a certain weekday has more or less volume, that has an impact on what the price action that day is going to be like. Is it going to be more choppy? Is there going to be a lot more continuation? So what this report looks at, and I highly recommend you guys go watch this video. You want to make sure that you're looking at the average volume and range by weekday. Not every weekday is going to be the same. And I said this before that you should look at all the reports by weekday, because some weekdays have a much different personality than others. And that's not my opinion. That's what the data shows. So so yeah, it's this here. So you can see that Mondays, typically for ES in the last 6 months, have had a lot lower volume and range than the other days. So in terms of a Monday, based on the average volume and the average range, which you can see right here, and obviously visually from this graph, that it's going to have lower volume and lower range. And typically what happens when there's low volume and low range is there's going to be a little bit of a choppier day, more range bound, a lot more wicks, not as much continuation, maybe more fake outs. There's a lot of different ways that people can interpret a low volume, low range day, but this one specifically, the way that I personally would do it, and again, you guys have to do your own analysis, you guys have to have your own interpretations, but the way that I would look at this personally is to say, if I know that there is lower volume, typically I'm not going to be going for these home run trades. I'm not going to be holding on to my winners. I'm not going to be setting my profit targets very far out, because there is not, price doesn't have the momentum, doesn't have the volume to get there. And especially when the range is smaller, like it is here on the Mondays, literally the high and the low of the day is condensed. So if you set your profit targets very far out, that's where price just might not get there that day. And if you do find a good setup on, which is obviously subjective, but if you do find a good setup on a Monday, you can, if you're expecting more choppy price action, more consolidation, or more fake outs, using some lighter size, it's probably not a bad idea, right? Whereas other days have more volatility. Typically that would mean that more continuation, larger ranges means that you can have, there's more meat on the bone in terms of the high to the low of the day. So if there's a 500 point move on the NQ, you can capture 50 points throughout that move pretty easily. But if there's a 75 point move the entire day, that's where capturing a 50 point move is pretty tough, because you need to catch the majority of the actual daily range, which is tough. So for me at least, I like to look at how much meat is there on the bone and what am I going for? If I'm expecting a tighter range, then I don't want to go for 80% of what that range is, or 90% of what that range is, obviously, because it's very, very difficult. I mean, like practically impossible to catch the bottom and catch the top. So this is one of the, I mean, in my opinion, one of the most underrated reports in Edgeful, because people just overlook this so much, to say, yeah, I don't really care about volume range. It's not really important. Like, show me the stuff where that has the levels, that has this and that. And like, the environment that you're stepping into is extremely important for you to adapt to. Yes, Mark, I love that. And range trading days versus momentum trading days. So I don't know if we're good on time. I can keep going if we're good on time, by the way. I don't know if everyone here wants me to keep going. I'm happy to keep going. But you guys can interrupt me to end this whenever. I'm totally fine with that. Yeah, that's fine. That's totally okay. And just a couple, literally like 1 or 2 more minutes to just go over this one last thing. So the ATR and ADR, average true range, average daily range. This is one where it takes this report specifically looks at the high and the average, the daily ADR in this case, and we can have it set to 14 days. It's typically the standard. And Sammy, by the way, I consider, in terms of, you don't really want to have like 10 or 15 reports. The one that the couple that I recommend in terms of like, well, not even that I recommend, like just the more popular ones are going to be these right here, if you're a scalper day trader. So these are going to be the ones that you can start with, at least to see, is it something that I like? Is it something that I don't like? Like, how is it doing right now? Like, for example, the gap fill in the mid last year was unbelievable for ES, for SPY, for QQQ. And now it's not really that great. So are you talking, oh, the what's in play? Okay. So we have all the reports for Forex. We just don't have the live data for Forex. So that's the one thing. We're working on it. We're gonna get there. If you want to reach out to our support down here, they can try to help you answer those questions. But we are working on getting the live data for Forex and crypto as well. Right now, we only have the equities and futures, obviously. But just to kind of finalize this point, because I know we are up on time, I want to be respectful of everyone's time here. The ADR report pretty much will tell you, and specifically the one that I like is the by weekday. And what you can see is how do certain weekdays behave. So you can see that how often does price exceed the ADR within this session. So you can see today, this is the live data. You can see today exceeded. It went 175% of the ADR, and the daily ADR is 76. So you can see here on Fridays, it will 46% of the time in the last 6 months, it has exceeded the ADR. And then 53, it has respected the ADR, which means it stays within. So if ADR is 100 points, if the high to the low of today is whatever, let's just say 50, that would be within the range, that would be respected. And you can go through and you can see, for example, Mondays, now obviously very important, lower volume, lower range. What do you expect? Price to stay within the ranges. You don't want to expect price to have these blowout home run days. Now, there are going to be days, of course, that do this, but typically you don't want to expect price to do that. So in this case, you can see how different weekdays behave. I highly recommend going through these reports and determining what weekdays behaves in certain manners, what fits your trading style, what doesn't fit your trading style. We have a million videos that you guys can watch. So right down here, again, I'm remaking every single one of these to have all the customizations, all of the, like, literally anything related to this report will be in that video, like chart examples, how to interpret it, how to use it. And I know that I showed you guys a lot. In summary, you want to go and you want to build your bookmarks. You want to build your quote unquote arsenal of reports, and you want to see what fits your personality, what fits your trading style. And from there, you can go and start to look at how you can kind of implement this in your trading. So that is going to be it for today. I appreciate you guys. I want to be respectful of everyone's time. And I appreciate all the questions. I love that you guys have been asking the questions. This is fantastic. You can always reach out to our support. We will answer you within like an hour or two. Thank you, Trader Keith. Thank you, guys. Thank you, Mark. Both Marks. Appreciate you guys. And that's going to be it for me. Appreciate all of you. This was a great presentation. I love the interaction. And yeah, I'm going to stop sharing my screen and we can go from there, right?
Thanks again, Andre, for taking the time to share with us today. Everyone in attendance will receive an on-demand recording of today's event, so keep an eye out for that email. If you enjoyed today's session, we hope you'll join us for future webinars. Follow us on social media for alerts about upcoming events and other NinjaTrader ecosystem news. We would like to remind you that the information provided in this was that of Edgeful and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day. We hope to see you in future webinars. Happy trading from all of us at NinjaTrader Ecosystem.